Hi, I'm Roger Conrad. I'm co-editor of Vital Resource Investor, and what I want to talk to you about is vital resources and basically the things that are needed for keeping economies going, keeping economies growing, and definitely a very exciting area to be in at this point in time. I think we're in fact just in the beginning of a very major bull market. It's been running for a couple of years now, but the major themes are very, very strong, scarcity being one. We are now looking at things, looking for things like copper that have been pretty much necessary for all economic growth all around the world for years. Now companies having to go into ever more difficult places to find them. A lot of countries, what we call resource nationalism has begun to sprout up, and that's basically countries looking to get a bigger take of the profit from what comes out of the ground in their countries. We're not at the point where we were in the 70s where you had wholesale nationalizations. In fact, that's not a preferred method to go, but rather the idea is getting the foreign capital in, but the host countries take a bigger take. So all these types of things are enforcing scarcity at the same time that these vital resources are being used more and more in countries like China and countries like India that are growing very rapidly, and those of course everybody's heard about, but probably what a lot of people don't know about is the countries of Eastern and Central Europe have been growing almost as fast as the Asian countries. So you got the Middle East, and just a tremendous call on the world's natural resources. And merger activities picked up. You see a lot of the users of these things trying to lock down sources. China's all over the world now. So there's really what's called the great game to lock down and secure better and more profitable sources of vital natural resources. So there are several themes. I think there's some more interesting than others at this point. Two that we've looked at very closely. One is iron ore, and of course this is a necessary component of steel. So anytime you see major construction anywhere in the world, you got to have iron ore. And there's only a very limited number of companies involved in this. In fact, the companies are rapidly consolidating in that area. We like big ones such as Rio Tinto, BHP Billiton, the two Australian giants. Also Vale, which is a Brazilian company, and they're the largest actually iron ore producer. And Brazilian iron ore is actually the highest quality in the world as well. So these companies are only just beginning to really take off, and as the price of iron ore rises, so will their earnings. The other major opportunity that we see right now is actually a laggard in the group, and that's aluminum. And the aluminum, which the primary raw material is bauxite, and that comes from only a very limited number of countries. Now, the Chinese have been very major consumers of aluminum. They had a policy of fostering a government-run operate, basically, or basically what wasn't government-run was heavily subsidized. And now they've kind of made a decision to go away from that. One of their major sources of alumina, or bauxite rather, used to make it, is drying up on them in Indonesia, so they're having to get it from further around the world. Their plants are very inefficient. They've been exporting a lot. So by rationalizing this business, they're going to take, in effect, a lot of aluminum off the market. And that means opportunities for the companies that are able to produce and sell aluminum at good prices. And number of players here, of course the big ones, there's also like Rio Tinto, which is pretty much involved in everything, but there's also smaller companies like Alumina, and again there's tremendous consolidation potential in this group. So vital resources, great targeted opportunities. I think a lot of fantastic opportunities going forward. It's also a great way for income investors to hedge themselves against what might be more inflation down the road as these raw material prices rise. So thanks for tuning in, and we'll look forward to talking to you next time.